I would also say we do have an amazing team, as well.
So, all right. So, can you talk about share some insight about some of the investors behind Eastside Golf and how have they contributed to the brand's growth?
No, I think we have a very strong cap table, and they have been very helpful, in the growth of the brand, whether it be guidance and things of that nature. But folks like Michael Strahan is an investor. He's been very helpful, and just in connections. You also have folks like CC Sabathia who it was just very organic. So when it came time to raise funds, it was like, all right, well, let's go reach out to somebody that believes in the brand, been rocking with the brand for a while. And so, there's quite a few other folks. We have some more, I would say, like institutional folks, so like Alan Smolinski. He's a minority owner of the LA Dodgers. And Alan is like someone that's very active and like always in our ear and challenging the way that we're thinking and saying, all right, okay, where are we at? Are we close to the profitability? How are sales doing? Those sorts of things. And then lastly, but not least, I would say, Steve Stout has been probably one of our most active investors where,
Absolutely.
we got monthly calls with Steve. We can call him about anything, but he's really been hands-on and even like helping with like personnel. Like, okay, cool. And, working with translations and, brand guidelines and just him understanding and seeing things blow up and just kind of as we, navigate in those waters.
Yeah, you said a key word there when it was time to raise funds.
Yeah.
And so I'm sure there's entrepreneurs who have businesses. When did y'all realize it was time for us to take in capital? Not because you necessarily needed it, but because you wanted to expand.
Yeah,
this.
we wanted
to
grow.
It was when we saw that we could come out with go in a different lane as far as collabs. Like we have an NBA licensing deal, MLB licensing deal, and then coming out with a women's line in spring, and even pushing towards accessories, like really getting that all the way dialed in, because not only do we have that, we have a PGA Tour partnership as well. So when we go into these actual merch tents at these PGA tournaments, we'd be able to afford it. We'd be able to afford the staff. We'd be able to grow our team and actually get all the things that we need, so we're not like shorthanded when the time comes. I mean, because running through money, it can go fast.
Yeah,
it can go fast.
I would add too, it's like, in the apparel business, you don't get paid. It's like really delayed, right? So you're making an investment now. You got to make an investment in the people, right? So if you want to design something, you got a whole production folks. Then it's a period of them actually producing the garment, and then you have to market the garment, and then it goes to market, right? So you need that capital to be working for you, because you're putting out a whole lot of money before you see anything back. Now, granted, once you have a product, right, you can kind of run it back and it's a little bit more quick turn, but it's still one of those things where you got to pay for the product often up front, and you're not necessarily guaranteed that money coming back. So, but like O said, raising capital, it kind of gives you an opportunity to make the investment in the personnel, right? Like you may have to go, I need to go hire a really good production person, which we went out and got, right? Because we saw that was a gap, right? All right, he's got these amazing ideas, but it's not making its way to the closet, right? And he's frustrated. So it's like, all right, let's work through this. And some people, again, that wasn't working out, so still keep trying. And now we have someone like the product is something that we're excited about and can stand by, just the quality of it. And so that was an investment that we had to make on the front end. And we made that investment, like April? And we're just now, that product is just now delivering and hitting shelves.
Yeah. How much, when did you raise?
So we raised, we just closed a round. Yeah.
This is your first round?
No, so we done safe rounds, 2 safe rounds.
What's a safe
round?
Note?
So basically, what a safe note allows you to do is very is founder friendly, essentially. So within raising on a safe round, you can project your cap. It's not where you are immediately right now, right? So just for small numbers, you can say, hey, I'm going to raise, and right now the company may be only valued at 100,000, but you can raise at $1 million. Now you still need to hit those numbers, right? When because when that safe converts into a note, then it needs you need to be at what you said you were going to be at, but it's more kind of futuristic and it's very, friendly, founder friendly. And I think it came out actually Y Combinator.
Y Combinator
as well.
for sure.
So how much did you guys raise?
We raised a few dollars.
Oh, it's top secret. A few dollars.
Yeah, we haven't disclosed that yet, but we raised a couple dollars.
Well, so it's like, all right. So, what was did you need to raise money, or was it
Yes.
you needed to raise
Yeah,
money?
yeah.
We did. And on top of raising the money, I mean, we made mistakes. You know what I'm saying?
For raising money?
No. Well, no, I wouldn't say raising
Without
money.
having money.
Yeah, well, without having money, but really mistakes within making garments. You know what I'm saying? Some of the things didn't come out right. We never came out with those pieces.
Like the quality.
Yeah, the quality or the lettering or the embroidery. I mean, something being wrong, we have to be able to cover that. But on the back end, that's where we go get somebody that we feel comfortable with that can actually do the job. You know what I'm saying? So a lot of times, people make mistakes. That's the nature of the beast, but if you have people that believe in you, I mean, speaking on even investors, I mean, they introduce us to even more investors that believe in us. They tell the story, but then they even say, yeah, these guys made, a couple little twinges there. They could have did this and did that, but this is what they're doing ultimately, and this is where they're going. So, I mean, even though the mistakes have happened, that's why we do raise, because we see where it can go, and the investors see where the entire business.
Because it's just all right. Even if we're making money, in order to grow, you gotta go. It's like a building, right? So it's like, all right, I may be making money off 5 apartments, but in order to go get another apartment building, because this is working, I got to go get capital to go acquire that. You know what I mean? So it's the same sort of thing where it's just like, we want to grow. So it's like, all right, we need to get larger numbers. So like, even now, the risk is just higher. So like now, when to that point, our orders are larger, so we have to have the cash flow to send someone to China where it's being produced, or the factory midway, right? So we went from getting 500 T-shirts to 5,000 T-shirts, right? So now we can't afford to just take a hit on 5,000 T-shirts.
Can't make a mistake on that.
So midway, you got to go out there and see it. Like, okay, how is it coming? What's the process?
QC it.
You know what I mean? Midway, because if you QC it when it's, when it hits your house, your warehouse, it's too late because it takes that window of time for it to get done. So those are kind of like I would say the little things that we're learning that have to be in place as you're building, this brand.
When you have the safe notes, is there a duration of time that you have to have it in? So if I'm making 100,000 and I say I can get to $1 million, do I have to do it within a certain time frame, 2 year, 3 year?
Yeah. I think it's like mutually agreed upon between you and the investor. But it's a mutually agreed upon note that you would do when you mature. But I mean, we plan on doing the Series A for sure. I would say probably in the next 12 to 18, 14 months, something like that. Because then again, it's just about growth, right? Like he said, like you want to go do a women's line, you got to go invest in a whole new host of people. New space in the office, more space in the warehouse, new things on a website, apps, like all different type of things that go into that demographic. And there's so much more we want to do, just as a brand, because it's a brand. It's not just a singular sweater or a T-shirt. It's a brand. So as we want to do all of these things, it definitely takes investment.